Good morning.
Hey, hey, good morning.
How's everything going?
Doing well, doing well. How about you?
Yeah, doing pretty good. Kind of taking a look at the market. Really interesting price action this morning. Not sure if you've been doing too much yet, but that steep drop seems to be getting bought up pretty rapidly here.
Yeah, it's pretty interesting. I was watching this morning just because I knew they had some data out this morning, and it seems that the market is liking it. It looks like the jobless claims numbers came out, and it was a little higher than expected. So, it seems like well, I guess the market's rationale is that the interest rate hikes are working, and maybe the job market will start cooling down a little bit. And I think that's the hope here because I think if the numbers came in, it was 211,000 versus 195,000 they expected. So finally, a miss in jobless claims after super strong numbers for a long time. But we'll see if it works out tomorrow because we got non-farm payrolls in the morning, and that'll be there's a lot of eyes on that one tomorrow.
Yeah, interesting to see, like you're mentioning, finally. Do you think it's just from them lowering the expectations on those unemployment numbers?
I mean, I think it's a little bit, but I mean, it, the rhetoric from Powell has been it was going to be higher for longer, right? And he'll say something, and then the market will rally off of it, right? So I mean, I was looking into it, listening to some people who are smarter than me about what they were thinking. They're seeing, finally starting to see, what's it called? The construction worker openings. In the last, was it the JOLTS report? They actually saw that actually went down quite a bit. And then that on top of, let's see, new building permits declined to a really low. So at least the housing market is starting to feel that. I think that's all related. So maybe it's starting to go in. I guess maybe it'll be in tomorrow's numbers. I mean, I think this market is really hoping that what Powell's saying is higher for longer is not as long as they're thinking. So,
Got it.
but who knows? I mean, yeah.
I dropped you a co-host invite. Do you see it?
Oh, yep, I see it now.
Perfect.
Thank you.
Okay. So maybe I can pull in Matt to kind of start us off here a little bit with what he's looking at this morning for trading futures.
Yep. Good morning, everybody. And
You'll just need to, by the way, Elite Trader, when you're not talking, you'll need to mute out because there's a background noise. And I
Oh,
and
sorry
I
about
can't
that.
I can't mute co-hosts.
Gotcha.
Um,
I gotcha.
cool. Yeah, all you, Matt.
I wanted to hear myself twice. Oh, well, good morning, everybody. There is I started using Elite Trader Finding account this week. I'm having so much fun doing it. It's my first time. Personally, enjoying the experience. So it's been fun so far. So I'll actually be streaming it live on my stream this morning. Getting the market started today, we had a little
Wonder why he keeps cutting out.
out a little bit.
You cut out for me, but you're back.
Any of the
Yeah, me too.
listeners, if you
Me too.
guys, am
You're
I
back
cutting out
now.
for you guys, or is it just the host vibe? Can listeners give me a thumbs up if you can hear me just well?
It was cutting it for me as well. I could hear like a word and then like five seconds of silence and then like 5 minutes seconds of
Yeah, but
words
I
and
think we
then
got you back now.
Oh, nice. Sorry about that, everyone. Just quick fundamental opening. So what we're dealing with, right? We have the FOMC is going to obviously raise rates or raise rates slower or stop raising rates, and they do that based on the surface level CPI. And the CPI inflation is pretty much controlled by the wages that we're experiencing. So the jobs numbers are very important. The unemployment filings are very important to gauge the state of wage inflation, and that's why the market's moving pre-market. So what you see is
All right, it's definitely still doing it. I'm not sure what's going on by you, Matt, but you are definitely cutting in and out, and I cannot hear you right now. So we are going to keep things rolling with some of the other speakers, and hopefully, Matt, if you can, I don't know, drop down, rejoin, something along those lines. Maybe it's your Wi-Fi. We can see what you're looking at. But Expo, do you want to pop in here, talk a little about what you're watching? Let's see. Expo? Testing, testing. All right, not sure if Expo is able to hear me, so Noah, coming to you.
What's going on, Wolf? I hope everything is working for me on my
Yeah,
end.
sounds good on your end.
Nice. Okay. So just from a technical standpoint, I don't love to trade that Thursday before NFP. You usually get that chop. It's similar to like the day before an FOMC day. Gun in my head, I would say that we trade back into that range from yesterday. To be quite honest, it seems like we broke out of it just now. As Matt was talking about on that news, I do have some resistance in this area, like the 410, 4008 level. So if we reject off of that, we could just come back into the yesterday's range and continue to chop. So that's kind of what I'm expecting to happen today. And that's really the only move that I would want to play. If we don't do that, like if we start to, trade higher, aggressively break out of that range, I honestly don't want to be involved because, like I said, the day before NFP, you do tend to get that choppy price action. So I just want to make sure that I'm not getting caught off sides there. But as for tomorrow, we have NFP, as Matt was talking about, and I think one of the points. It sounded like this is kind of where he was going, is that tomorrow's going to be a massive, massive print just regarding what the FOMC might want to do with March, with the March interest rate decision. You heard Powell the entire week, and you saw the markets moving the entire week off of the fact that they're pretty strongly considering 50 basis points in March, and it seems like the market's actually believe pretty aggressively that they're going to go with 50 basis points in March. At least that's what the Fed funds futures are pricing in. So tomorrow's print should give a little bit more clarity on if that is actually going to be the case. If you guys remember, we had that print back in February from the month of January, and it came in really hot, 500,000, way over expected, showing that the labor market was still just chugging along really, really strong. And so if we get another one of those tomorrow, I mean, I don't think anybody's really forecasting it to be quite that crazy, but if we were to get another one of those tomorrow, you could obviously imagine that it would pretty much be a foregone conclusion that we would see that 50 basis points. So I think that's what the market is sort of waiting on here, at least for today. And that's why I believe that we're actually going to trade back into that range as the market sort of waits on that data that's going to be fundamentally important for where we go over the next several months. So that's sort of my game plan for today.
Sounds good, Noah. Thank you. Matt, can we hear you now?
Yes. Actually, looks like my internet went out for just a slight minute, so it was actually my fault. Sorry about that, guys. So just recapping what I was saying is that you have more people getting laid off and more people that were laid off that can't get their jobs back and more jobs that are open. It's a weird disparity, right? So what's going on is that companies were laying off their inefficient labor, the people that were getting really high salaries, but they realized they weren't needed just to trim the fat. And that disparity is showing that, there's a lot of supply of workers that don't have jobs, a lot of jobs available. The companies are being picky about who they hire. They want talented folks that want less money. So with the supply of labor the way that it is, will drive wages lower, which means the CPI should be coming down over time with more people not able to get their jobs back. Therefore, the FOMC is likely to taper faster, which is why the market's perceived as bullish. You piece it all together. That's why more people being unemployed kick the market up. It's forcing the hand of the Fed to not need to be as aggressive if the companies themselves are creating the effects that can lower inflation, which is laying people off. So as you see, the spike we had off of that data is betting on a lower FOMC or like a less hawkish action for that. And that's how it's perceived. So if you guys want to see why we took a little spike while people are getting unemployed, it's that same thing we've said all year is bad news is good news. And that's pretty cool to see that mechanic. And we're opening right in the middle, and especially in rocket scooter stuff, right in the middle of the rational market. It's nice and clean. It's going to be a fun trading day for sure.
All right, perfect. We got like 3-4 minutes to the open. Evan, do we have any big news stories this morning?
Yeah, there were a bunch of news stories. We hit the jobless data pretty well right there. General Motors announced a voluntary separation program. Kind of a fancy word for layoffs, but more or less they're letting people choose if they want to leave the company and they'll get some compensation back. Apple supplier Foxconn said a story that they were moving or dismantling an assembly line in their Shenzhen campus was false. That's according to the South China Morning Post, which I guess could be a little bit biased, but that story came out of there. Taiwan Semiconductor is reportedly being dragged down by rapid slowdown in 7 nanometer and 6 nanometer chip orders, but the foundry has been able to keep its fab utilization rates at about 70% or higher. So definitely have TSMC on watch. We had multiple different job information come out this morning. Challenger also came out, and we have also non-farm payroll, but kind of telling the same story there. U.S. stock buybacks are at a record high so far. $261 billion have been announced so far in 2023. Most of that coming from Chevron, Facebook, Goldman, Bookings, and Salesforce. We also had American Express. I don't know if a lot of people weren't talking about this. They announced a new $21.4 billion share buyback last night. They had about $7 billion left, so it's really a $14 billion addition to their share buyback plan. And they also raised their quarterly dividend. Microsoft's Bing now has 100 million daily active users, which kind of surprised me. So people are actually using Bing. Silvergate went down last night. We kind of saw that one. Ooh. Sorry, I had someone come in. But yeah, that's most of the stories. There was a story last night around President Biden kind of showing off or hinting at what would be his new tax plan. And a lot of people were misrepresenting it online. But yeah, the biggest one that I was seeing misrepresented was the capital gains tax increase going up to 39.6%, up from 20%. Don't worry, that will not affect the majority of the people. It is only for people making more than $1 million per year. And this was just kind of estimated. And actually, last story I'll leave you with. Credit Suisse announced today that they're going to delay the publication of its 2022 annual report after a late night call with the US SEC last night. So that's an interesting one. I haven't actually looked at Credit Suisse stock, but that's probably not what you want to happen.
Got it. Okay, yeah, let me hop in with one more thing here. So today, once we're going to get into the trading because that's going to start in just a minute or two, and we got a lot of great traders on here. So I would love to keep that floor open. Just remind people, try to maybe speak in increments of, 1 to 2 minutes, allowing people to kind of go back and forth. If you see someone's hand go up, maybe try to defer to them unless you have a point that you really need to get out at that second. Also, today we are trading alongside our friends from Elite Trader Funding. You can see them up here with me co-hosting. Elite Trader Funding is an awesome platform if you are looking to trade futures. I'm all set up there now with Tradeovate, Elite Trader Funding, learning a lot more about the futures side. We're going to also really focus on education because obviously a lot of you may not be familiar with futures trading, but the general gist of this is a ton of people, especially in my audience, option trade. And when you're option trading, you can be completely correct on the direction that a stock is going, and you can still lose money because you have IV, you have theta decay, and a lot of other things which can work against you. Option trading can give you some similar volatility, but you don't have to worry about that theta decay. And they basically offer a free trial for a simulation, so you can hop in here, basically trade in the simulation, and if you can show that you are an accurate trader, you can actually get funded and then keep, I think it's 80% plus of those profits afterwards. So really a way to kind of take a stab at not having to risk your own money is what this is. And I have a link in the top of the space. If anyone wants to check that out, we'll talk more about it later, but just giving a little bit of preface as to why we're talking futures and what we're doing here. So we're at market open. Again, I'm going to go around, but raising your hand is a great way to get me to come to you. I just want to pop back to Elite Trader Funding once more just to see what you're looking at the open. And then I want to hit G-Nuts, Kim, Expo, Excalibur, Paper. We got a bunch of great names.
Yeah, no, that's great. Thanks for the introduction. I think where we're opening right now at right around 4,000 in the ES. It's a big level. It's been a big psychological level. Let's see if the market can actually hold its little jobless claims jobless claims pop. Let's see if it can hold it and actually build some momentum to the upside. It's been a while since we've seen a good rally. It's been kind of messy the last couple of days, so let's see if it keeps going.
Sounds good. Nick, what are you looking at here?
Yeah, so I'm going to be watching obviously the futures here coming into yesterday's highs, 4,005, 4,007. We need a break above that on ES futures for us to push higher into 4021 and 4030. Fed Vice Chair Barr speaks at 10 a.m. Eastern, so that's basically the only major news event other than what already happened for today. So going to be watching that and just see how we play out, and watching the dollar as well to see what kind of goes on, uh, and if we support on the dollar, which could negatively affect uh, S&P 500 futures.
Got it. Thanks, Nick. All right, Sean, what's going on, man? Thanks for joining us. I believe it's Sean buying the account. Sound Trading Psychology? Yeah?
It is. Thanks for having me. How you guys doing?
Good, man. What's going on?
Not much. Not much. I am looking at similar things. I know I'm here to talk about the trade psych, but I'm looking at similar things and really curious what's going to happen where that TPOC and VPOC are 2 ticks off today, and where there's some single prints down towards the lows yesterday, and see what happens if the price action gets down there. But I was invited here today to talk about a workshop I'm doing with Elite Trader Funding, and it's a 4-week live trade psych workshop, and we are focused on several different things. Now, I don't want to take
Sean,
too
yeah, I
much
will
time
say
here.
we're going to cover more of that around like the 10 a.m. mark on the workshop. I was just checking.
Oh, I'm sorry
Yeah,
about
no,
that.
no, no. That's on me. I was asking first off, just right here, if there's anything specific that you're watching on the charts.
Yep, it is. It's that those. There's a set of single prints from 67.50 down to 39.55. I'm curious. Obviously we're still above, or we're hovering at yesterday's high. Looking to see if that holds. The pop holds. That TPOC and VPOC 2 ticks apart, and really seeing what price does around there and how buyers and sellers respond.
Okay, perfect. Excalibur, can you hear me? I see you unmuted. Okay.
So today, this little analysis right out the door, we open, I'm looking at SPY and QQQ. All signs are looking nice and steady and bullish. Our DD ratio number is slightly above 50, so it's 53. Market slightly more bullish than bearish. SPY is opening kind of in this what called liquidity pocket, so the market is nice and balanced in SPY. But QQQ, on the other hand, is opening very on the bull side of things. So we have a nice little hedge pressure spread on QQQ from 297.5 to 299. It's a nice tight range. There's slightly more upside than downside at the moment. Resiliences are all positive. So today is not a breakout day, but today is not a sell-off day from all things I'm looking at. So SPY at 400, a breakout of 400 on SPY to the upside, about 402 and a quarter will be that upper DD band. So today is a nice, I guess I'll say bullish-ish kind of day with no evidence of a downside. So SPY's pressing 400 the upside. It's a hedge pressure break. We got 20, 30 more points to run if possible. If we get that, all the signs are staying slightly positive. I do like what I see for today. That's good. All across the board, all signs are good.
Sounds good. Paper, what are you watching, man?
Watching Meta, watching Tesla, and the Sammys right now. SPY's kind of like in this bounce range. It looks constructive. Meta triggered out of the gate, but went straight to the targets. Tesla's right about to trigger for me. I'm like looking at these 185 calls. NVIDIA, AMD broke pre-market highs, but it's so far up there already. Target, like it would have just been like instant grab the calls, and then instant profit. So there's a downside play on Bava potentially. We're just looking at triggering below 85, sitting there right now, and that's about it. I'm watching Tesla right now. I like that, pull back in the pre, instantly bought up. I'm gonna see if we can bounce off this opening range, like 1 minute opening range somewhere around 181, and then press through 182.50 for a follow through up to 187. So I'd be on that 185 calls. Sorry. If we want to talk futures, US or like CL looks good, and gold futures look good too. There's trigger on Tesla.
What's the gold future ticker?
GC on my end. I don't know.
GCH3, is that the normal one that you're touching?
I don't actually trade this. Hold on. Wait, this.
The normal one is GC1 exclamation, and it'll bring you to the current expiration contract every time. The letter after is always going to change every 3 months based on what contract expiration we're on.
Got it.
Is that Jesse?
It is.
It sounded
I
like
was
Jesse.
having some technical
Look at
issues
that.
earlier. Sorry, Wolf.
No, you're good,
Morning,
man. Jesse
sunshine.
dropping some education and some futures education on
Jesse's
here.
the man. Jesse and Excalibur.
On top of that, if you are using TradingView, make sure that you have the $4 subscription for futures data. I think it's like CMEG or something similar to that. That way you're not lagging by 10 minutes.
Nice. Jesse, what are you looking at?
I am currently looking at NQ longs. I got chopped up pretty bad yesterday, so really looking to play a little safer today and with the trend and maybe a little wider stops to try to not get chopped up. But yesterday we ended a failed 2, so any stratters out there know that that's a bullish signal, meaning that we took liquidity on the sell side and ended up with a green candle. And so that combined with what I'm seeing right now in the opening bell, we're shooting up, but we do have some fair value gaps below us that could draw us maybe around the 12,200 range on NQ, but ultimately leaning bullish this morning.
Meta with the follow through here.
How about you, Excalibur?
All right, hopefully my stuff's
We got
working.
you.
Okay. Not really picking a side today. My pivot's 39.86. Definitely watching 40.10 has a little liquidity above, and then 40.20. Just playing it basically 10 minute by 10 minutes today. Yeah, yesterday was definitely a challenge for me. Just watching to see if we hold above yesterday's highs. We break that, I think we're gonna probably head to that 40.20 area.
Okay, watching 40.20. So for those that are looking at some of the futures stuff with us, you'll see us kind of moving around right here, around 4,006.5. We're not on SPY anymore, folks. Looks like high of day right now is 4,009.5 on a previous press up, and the lower end is 39.78 from back in pre-market. So a couple pieces there. Okay, good morning, Kim. What are you looking at today?
Good morning. I just wanted to also mention, instead of just trading the big contracts, so for everybody in the audience who hasn't traded futures or who is new to futures, there's the micro contracts, and those are 1/10 of the size. And what I love about the micro contracts is you can scale, for me, you can scale in and out of those much easier. And so, for example, the gold micro futures contract that I use a lot is MGC, and the silver is SIL. So I've been looking to get long gold again on the micro contract at about 1790, and then scale in if it drops. Right now, that's what I'm doing with M&Q. So I'm long a lot of tech, and like in stocks like Apple, Google, Amazon. And so I'm slowly scaling into shorts on M&Q. So right now I'm short a few contracts, and then I'm going to go short again at 381. But right now the M&Q has made a higher high for the week. So I use futures oftentimes to hedge my portfolio, but also if I want to get long an index or hedge my position. Just be careful, everybody out there, because the NQ and even the MNQ can move so fast on you. So if you don't know what you're doing, you can have losses very quickly. So it's really important to know how much risk you're taking on. But like Wolf said earlier, these are amazing products because for myself, I can stay in them. And, it's not like an option where I'm like, what's the theta decay? What's the gamma? You can stay in these and they're cash settled at the end of every night. One last thing I want to say, there's also the small exchange. So if you even want to play it smaller just to get used to these, there's a small exchange out there, and I've used that before just to get used to how futures move.
So, Kim, when it comes to ES, would you be using a micro version of that typically, like a instead of ES, like is it MES or something?
Yeah, so my husband, you know this, Wolf, but just to mention, my husband was a futures trader for, S&P, managed a trading desk. And so uh, I've gone through periods where, we have a couple different accounts and he's put, like the other day I woke up to like three long YMs. And I just can't for myself, I that's a lot of risk. And so for myself, I like to play the micros. So like for the Dow, it's MYM. And the thing is, like, if you were a floor trader or a big trader, then you're used to that kind of risk because you know how the market moves. But for me, I like to play it more safely because I can scale in and out of those. That's what I love about it. If I'm short two large NQs, right, the minis, and then it moves against me, like like tomorrow in the jobs report, if it moves against me, it's much harder to scale in and out of those. So I love using the micros. I can buy 5 micros, I can sell 10 micros. Plus, I also like it because if you really get backwards, then you can also use the big NQ, for example, to hedge against what you have short in the micros. I don't do that often. I don't recommend it, but there are other ways to hedge against your position if it really goes against you.
Got it.
And there's also futures options, and I do use those also, and they don't have the theta decay. They're not as liquid, but I definitely use them.
Hmm. If anybody does take a trade here, definitely let us know, especially if it's a futures trade.
Just grab. Oh, sorry. I'd be long ES, I guess, but 402 calls on SPY.
Okay. Nick?
Yeah, same. That's some great info, Kim. Teaching people about micros. I love hearing it because most new traders get drawn to options and trading options in a cash account because it's the way you can get started without a $25,000 FINRA margin account. But here's the thing: people don't know that futures you can get started for cheaper with a lot more control over your trades. And I love when somebody talks about micros. So that is a knowledge bomb right there for new traders. Like I said, futures to me is the easiest place for a day trader to get started. Is trading micro futures, especially with all the available like elite trader funding or other practice environments you have. You can actually you don't have to have those account minimums. And so Kim's dropping some knowledge bombs there.
Yeah.
By the way, I also went long. I'm long the ES as
Ooh,
well.
okay.
So
One more thing, Wolf, I wanted to say, just know how many shares, just convert it into shares. So one micro MNQ is 80 shares. So you're either short or long 80 shares.
Ooh.
And one micro ES is short or long 50 shares of SPY. So if you can convert it to that and you learn your numbers, then you can better understand how much risk you're taking. But it's also a great way to get long, let's say, the SPY. If you have a big dump and you've been looking to get long SPY, for example, you can buy the micro futures and you're buying 50 shares essentially of SPY. But you're using less dollars. You don't have to actually take all that capital and put it into SPY. You're using less dollars. I think it's like 1,800 to buy essentially 50 shares of SPY with MES. And then the big ES is 10 times that. So you're buying 500 shares.
Yep. Okay. What's up, Nick?
I was just gonna say, we are over 4,007 right now, but I mean, I want to see some more strength here. And right now we're getting it, so let's see. But that 4,007 is a big spot.
I took a.
We get 4,020. Yeah, sorry about that. I got a phone call. Watch 4,007 if we push above 4,021. Wait, hold on. Get
Okay. I took a contract of the MES H3 as well. Took one of those long. Realized I got stopped on the first one, but I came back in and took another. And looks like a pretty nice trade. I may close that out right here, actually, just to take a little bit of profit. You know what I'm talking about. Okay, okay. Future trading up in here. What's up, Noah?
No, I just
You'll sound excited about how much more you make on the penny moves than
Well,
options.
all of a sudden the thing was up $20. I just put it in.
Yep, that's how it is. No IV. That's very linear payouts. That right there, I think, is what's good about futures, right? It's a 1-to-1 payout, right? Linear versus like the convexity with IV. That's the difference.
I wanted to touch on the MES thing. You guys brought up some really great points. One thing I would add is that when you're doing if you do decide to do like a funded account challenge with like Elite Trader or any other prop firms out there, one of the things that I've heard can get people in trouble is, especially if you started with like a smaller account, now that you have access to maybe the limit is like 4 minis, right? You don't necessarily have to go in and trade 4 minis right away, because I've found that a lot of the people I've talked to who have struggled to pass, they start out right off the gate with like 4 minis, and then they lose one trade, and then it's like, you're in a massive hole that you have to dig yourself out of. So just keep that in mind if you're doing like a funded account. That's where those micros can really come in handy as well, to sort of limit
Yeah,
your risk.
yeah, spot on. And what he's referring to, for those that didn't check it out already, is we have a link in the top of the space. So
I'm trimming, by the way, on SPY here. 65 from
looks like
45.
we got a couple trades.
I am in NQ long.
NQ long?
Yep.
Yeah.
Taking a trim on Tesla also.
Yep, just a scalp, 20 points or so. Right
What do you got, Excalibur?
Yeah, 404 volume moved up to 408, the RTH to 4008. That 4010 seller look. So I'm watching 4012 turns into support here, and then head up that 560 lots at 4020.
Got it. Okay, so yeah.
But I'm long.
So I really liked what Noah was sharing beforehand. Sorry, Excalibur, you were cutting in and out a little. I apologize if I talked over you at all. Noah was saying some really good advice. So again, if you want to check out what we're doing and you're interested in learning about futures, and I think this is certainly worth taking the stab at, because again, like you just heard, remove that complexity of the options. I know people want to be able to, get that volatility and not have to trade with massive position sizing. But with options, you have to remember that you can be completely correct. You can say, this stock's going to go up, I'm going to buy calls, and you can still lose money many times, right? Just because of IV, because of theta decay, because of other Greeks that are affecting you. So this completely removes those Greeks, but as you can see, still very volatile. And I mean, we're pushing up here. So anybody that's taken any of the trades on this space, you're making money. And you can test this out for free without your money. We've got a link in the top of the space. You're not going to be able to find like simulated futures trading on a lot of your like market watch type platforms. But if you check out the link in the top of this space, you'll get that free trial to check out this simulator. And again, it's not just, hey, I'm just paper trading and checking this out. If you perform well in this, they will literally fund your account. That's how that works. So there's a lot of pieces to this. So take a stab, right? See if you are excited by this, but learn first, right? Don't just like YOLO off the edge, right? Come and listen. That's why I tried to bring on a bunch of experienced futures traders who are giving out some great insights today. Literally just learning about things like tickers, risk management, other pieces is going to be all that starting point. So I'm really enjoying this. I'm excited to learn about this. Elite Trader, I'll bring it back to you, see if there's anything you want to add on to that and what else you're watching.
Yeah, no, I'm actually impressed that they're actually following through on this. I was trying to scalp a little bit here and there, so I got a few points here and there, just using a couple ES contracts. I used to trade MES. But I'm pretty comfortable just trading 1 or 2 at a time, and so the push is strong. Actually, kind of surprised. It looked like there were a bunch of sellers, and then all of a sudden I guess they just ran the stops and they just kept going. So it's been good.
Can I just congrats to Jesse on the NQ? I think that was the winner so far. I think.
Yeah.
Although
yeah,
USO.
I'm up about 30 points right now.
Yeah, wow. USO and GC look, I mean, those might pay out a little bit differently, but did you guys already go over like different futures pay differently per
Cover
tick?
it.
Oh no, I think one of the other maybe like Brandon or Jesse could cover it. I trade with them like on a daily, so I know that they're pretty familiar with it, but I think it's probably better for one of the funded futures guys to do it.
Yeah. So I can cover a little bit while XCal just sent me a message that he's having a little bit of issues. But so NQ is going to move a little bit more crazy. So NQ moves $2 per point, while ES moves $5 per point. So you might think that ES moves more, but in reality, NQ's price is about 3 times as much as ES's. So it's going to move a little bit more volatilely. I don't trade a lot of CL, but CL moves $1,000 per point, and then I don't trade any gold, so I'm not familiar with that. But I think it's the same thing, $100 or $1,000 per point, depending on what you're buying.
Hey. Oh, did I
Yeah.
see? Sometimes I have the blind on. Did I hear
No,
somebody say
yeah,
Matt or
Jesse
no?
was, I think, coming to the end of his point there. Jesse, you have anything else you want to add on there?
Nope. I mean, a lot of people who I trade with like ES or NQ. It's very much a personality thing, just based on, if you are able to handle the heat, then NQ can pay a lot, and if not, then a lot of people like ES because like the points move slower. But the thing I love about futures is that you can have a capped risk per trade if you just calculate how many contracts you're buying. So say on like my NQ trade, if I wanted to lose, $460 just to make it even, and I had a 23-point stop, I can lose $20 per point, and I can calculate that to be 10 micros or 1 mini, and so you're able to kind of tinker around with how much you want to risk, and also how fast you want to play, depending on if you want to play NQ or ES. But nope, I was at the end of my point.
Sounds good. Matt, you got something you added to what you wanted to add on here?
Oh yeah, so today, long and strong out the door. I took on hedge pressure break, talked about this morning, at 299 break on QQQ, and 400 break on S&P. I jumped in on the long, traded up to the Rocket Scooter upper DD bands on the eval account and the funded account. I'm doing a 150 static eval with ETF, and it's day number 2, and I'm almost about to pass it. I think it's a 5-day minimum, right, to trade this one. So this is really fun. I'm loving the experience. So the Elite Trader funding accounts, I've got 2 of them I'm using. I'm doing a 250 drawdown. It's called the end of day drawdown account, which requires a $15,000 profit target. So it's going to take a little bit more. I've done some risk management calcs about 2 or 3 weeks to pass that one just to safely get there. And what I love about the Elite Trader funding program is they try to breed longer term relationships with their clients. And they don't want you to just go in and YOLO to the top, get lucky on a trade. They really reward you for taking your time and getting there slowly. So I don't know if this is cool to say, but I think I made a little spreadsheet that I think is going to beat your system here, because I'm going to take it low and slow and get there, and we're going to have a long relationship myself. So I'm planning out maybe a 2 to 3 week path on the 250 account, and then the 150 account, I'm going to try to get there pretty fast in 5 days. Like a day like today, when I'm Rocket Scooter, everything lines up. I go long and strong out the door on that 150, and then take my time on the 250. So I'm trading up to upper DD band, which is like basically like textbook Rocket Scooter. All things are long, resilience is nice and strong. The DD ratio long and strong, hedge pressure break, nice bull squeeze to the upside. And then I just close out all my positions, except for a couple of runners I left on the 250 eval. So this is pretty cool. And I also like how it's pretty easy just to kind of like see all the rules on y'all's website. Kudos to y'all. This is really fun. And all the folks that are using it, especially folks from our community, they really love it. So thanks for doing this. Thanks for coming out in Spaces.
I've been hearing a lot of...
Oh.
Yeah, go for it.
Yeah, I was gonna say, while Matt was talking, I saw a bunch of market sells, but I was gonna see if this actually has some follow through on it. So the longs might be, it looks like the sellers are waiting close to 40.20 on ES. So that we'll see how this works out, because it's still long or not. But it might just be some profit taking, but there's some good sell volume there. And Matt, like I say, for Rocket Scooter, we love the fact that you see it as a long-term relationship. Like that's definitely how we see it. And hey, we don't mind you sharing the spreadsheet. That's fantastic. That's a great way to look at it. And honestly, that's what we're hoping to partner with, people like you who actually want to and do the long-term goal and not take the really crazy risks. So we definitely appreciate that.
Yeah, and I really like combining these tools. I know that we're not talking too much rocket scooter in this space, but it was pretty helpful this morning for figuring out to go long because you could see we came right through the hedge pressure, retested it, we bounced, and that's where we all basically took this long right off that bounce. Um, and then, that worked out really well with going into, trade of eight and just kind of using the tool there. And I really like how it marks where I bought and where I sold on the chart with an arrow. That's helpful. I hadn't seen that too much before. So I think that that's pretty interesting. Kim, you've been sharing a lot of good advice. Any other advice or thoughts or pieces for new futures traders?
Really stay out of, if you don't know what you're doing, stay out of the NQ, because like one of your previous traders said, that one is the one that has a lot of velocity essentially. So you can see that drop, not kidding you, 400 points in a second when news comes out. And you will get chopped up because it'll go down 400 points and up 200 points and back down when, Powell's talking or some news drops. So you just really want to be careful and know, like for myself, like I said, I use futures oftentimes as a hedge, right? So I don't mind, if we have that 400 point drop or 400 point up, because I'm using it to balance out my whole portfolio. But if you're only using futures and you're not used to them, you will get chopped up so fast. So start out with ES, like some of your other, speakers said, because that one is easier to manage. And just start with one, and see how it moves. Don't get greedy. Know what your risk is. It's really important. I'm looking to get short MNQ at 381. So I have a sell order in if we get up there. I use a 5-minute, my husband uses a 15-minute chart. I don't like it because it moves too slow. So I use a 5-minute chart. And I was taught by a futures trader who he actually trades oil. He actually takes possession of it. And he spent a lot of time with me learning how to use the Bollinger Bands and how, when something goes way outside the Bollinger Bands, once the morning numbers are set, that's where you want to short. If it goes outside, the short way, that's where you want a long, and you're looking for it to revert back to the mean if you're day trading it. That's how I do it. And so for my short MNQ position that I'm underwater on, so essentially, like I mentioned before, I'm using it against my longs. I will day trade kind of around that short position. So if we get up to 381, I will, look to get short there again. If we get a big pop down, I'll take those couple back off, but I'll still stay short MNQ because I think there's a lot of risk in this market. So I want to make sure that if we get, a downtrend, that I'm protecting against my stocks. I was also long Dow this morning and I just took that off. And the Dow is the YM, but I use the MYM. So I was long that yesterday and got a nice pop on that. So I took it off this morning. And I put in the chat what the equivalency is for the micros per shares. You can also trade, you could do pairs trades. For example, you could go short the 2-year and maybe long the 10-year if you think that yield curve is going to, start uninverting essentially, because it's the highest, I think, inversion since, I don't know, 2007 or something like that. Someone correct me if I'm wrong. So you could do pairs trades. So sometimes I'll do that. And also I use it to get long or short the VIX. So VXM, now that contract expires every month. So it's not every 3 months. So if you're wrong on that, it moves a little bit quicker. But VXM is a great way that's the micro VIX. It's a great way to get long or short VIX. So VIX is really at a low point right now. So if you think vol's going to expand, you could go long. I'm actually long right now, VXM. So that's how I buy or sell vol.
You said VXM?
Yeah, VXM. That's the micro. I think VX is the mini.
Got it. Okay. All right. It's good
So I
stuff
have
there, Kim.
my
Yeah.
I have my sold at, or my futures to sell at 381
Okay. Got it.
on M
Lot
and
going
Q,
on
I should
here.
say.
Mm-hmm.
Just out of curiosity, what is your stop on that short at 381?
Okay, so for me, I don't use stops.
Gotcha.
So don't anyone else follow that. Now, when my husband puts on, 5 short ES or something, that gives me a panic attack. But I don't use stops because I'm hedging it against my positions. I will sometimes bracket it if I'm wanting to like, let's say I'm short MNQ, which I am, so that's underwater right now, and I want to scalp for a day trade. I'll put a bracket on, but I'm usually looking at kind of reversion to the mean. But I don't recommend this to anybody. But I have an account that I can hold these. It's cash sell, and I'm able to hold them. So, like I said, I'm hedging it like a long short against my stocks. So I don't recommend that for anyone else, but just in all honesty, I don't use stops because I'm not net short in my account. I'm net long. So I just will add as we keep going up with the micros. Because tomorrow we're going to probably get a lot of vol. It could go against me, right? But I do have buybacks set, right? So for my short M and Q positions, I have scaled out buyback set. So I do that, but I don't have a stop to the upside. But I'm not typically day trading it. I'm swing trading it. If it really came my way, then I would get out. But so here's the thing, you guys, you have to think of, why am I trading these? If I'm day trading them and I'm in like a, prop account, then definitely you want to be using stops. And I would probably go to the upper band as my stop, and to get out, I'd go to the mean, essentially. So it's like, ask yourself the why. Why am I putting this trade on? For me, it's to hedge against my longs. Not always, but currently that's what I'm doing. And if it's day trading, you for sure want to be using stops. If you're in a prop account, I think you have to be out of all your trades by the end of the day, correct?
Yeah, I believe it'll liquidate you.
Yeah, exactly. So then you need to be using stops because you're using someone else's funds, right? I'm using my own funds.
What's going on, Excalibur?
Oh, we just had a Fed speaker starting to come out with comments. Bar, I just want to make that. And VIX is under 19. And also something, when I trade futures, I always look at your kind of like the big guys, Apple, semis, Tesla, Microsoft. Today, all of them seem super strong. So what I look for when that happens, kind of look for pullbacks to go long. But that 40-20 seller was definitely there. I want to see if we push past that area. I'm just reading the bar comments right now.
The comments from Barr I've seen so far have mostly been around crypto and the Fed, kind of saying that banks are expected to notify the Fed before engaging with crypto. Fed would view it as unsafe for banks to directly own crypto assets. I wonder if this is kind of in reference to what we're seeing around Silvergate, but yeah.
All right. Let me pull back real quick. Elite Trader Funding, did you have anything else you want to add right here, or should we maybe drop it to Sean to talk about what he's working on?
Yeah, no, I really appreciate everyone's insights, and I gotta say, like, further to the point that, like, Kim, the way she's looking at it is a very much a portfolio view. So it is, she made that distinction, and it's very clear that the way she's talking, that I'm like, oh, okay, I get it. You're managing portfolio and you're hedging. And then most people who do trade futures, I mean, the way I look at it is a bread and butter kind of thing. Like, you use the money to pay your rent, so to speak. And that's my way of doing it. But other people, like, who have a little more risk appetite, can hold it overnight. But for the most part, we're day traders, right? So that's why we don't hold overnight, and we don't want to get wiped out on a loss, because most of us don't have hedges on the side. So that's just one of these key distinctions that we should keep clear. But definitely appreciate those kind of views. But other than that, let's turn it over to Sean.
Thanks, everybody. And thanks for having me. I appreciate it. Pardon me. I'm a little under the weather today, so bear with me. And I've got to say, what people are talking about in terms of micro, for newer futures traders, in terms of using micros instead of minis, and just the benefits of not having theta, those things are really good for trading psychology, and they're really good for building confidence and competence when you're learning to trade, because trading is hard enough to have yourself pick the right direction and lose money. It's such a mind f that it just adds to that. Those can contribute to forming bad habits and letting impulsivity and frustration and stuff take over. So these things are really good information for trades like too. And we were just talking about stops, and if you just looked, if you were in a trade right now, I cut mine just before I hopped on, but we just had a quick little 5-point drop. So those stops in terms of prop funding and things like that will save your ass. So unless you have a massive account, or I'm not to assume, but like Kim was talking about, a portfolio account, all these things are also good for trading psychology. But what we're here to talk about is Elite Trader Funding and I have been teamed up to put together some trading psychology workshops, and they are live workshops. I have been a psychotherapist for 20 years, and I've been an active trader full-time trader for 5, an active trader for longer than that. But I am primarily a futures trader, and we're working together to help people with their trade psych, help them pass their props, and develop those skills for longevity in trading. And before I go on too much about this, I'm curious, Eric, if there's anything in particular you are wanting me to highlight about what we're doing together.
Well, I was just going to say, we're partnered with Sean because, I talked to Sean when we were talking about doing this partnership, and the way he talked, I'm like, oh, you've worked with traders. I can definitely tell, because I personally have worked in a trade shop before, so understanding how we traded physical products and with contracts on the sides to offset the risk. But so the lingo, he understands that. He understands the psychology, because I've seen traders blow up in person. On the trade floor, and it's not pretty. I seen a guy lose I think he lost about $200 million in a week trying to short oil when it was going up, and he kept shorting it, and then our risk management team told him to stop and said, what does he do? He doubles down. So he lost so much more money, and he also lost his job as a result, which could have been prevented had he just got his head around the fact that, hey, don't double down on this. This isn't gambling. This is your livelihood, right? So, and that's what I saw the importance of having understand trade psychology. And so Sean is a great resource to understand it, because I know all of us get in that thing when we lose a trade, make a bad trade, make a dumb trade, or I missed out on something. Like that's one of those things that it creeps in and it messes with you. So we partnered with him because we wanted to help traders develop. And he's got a fantastic workshop. We've got a couple workshops to do. We filled up the first one, so I think we've got about 15 spots left on the second one. So please definitely check it out, and I'll let Sean kind of tell you exactly what it's about.
Sure. And that example you shared, that guy, he is unusual as it might sound, he wasn't accepting reality, and that non-acceptance is a huge and common problem in trading. We fight reality. Whether it's ego driven or what, it doesn't even matter. What we have to learn is how to become flexible psychologically and stop fighting reality and accept what's going on in the market, accept price action. And you mentioned, excuse me, that the risk management team told him to stop. He doubled down. He lost his job. Another thing that person wasn't considering is, the existential part of trading, the existential psychology, as in his values, what's important to him. If he was in touch with, I'm going to lose my livelihood, I'm going to disappoint my family or my wife or my partner, whatever, that also has motivational properties that a lot of people don't utilize in or in risk management. And if he had been in touch with that stuff, it might have helped him accept that reality and made different decisions in that, doubling down process. And that's a lot about that type of stuff is what we talk a lot about in the Trade Psych Workshop. I use, things like mindfulness, but applied mindfulness, actionable, practicable, if that's a word, skills that are tied into mindfulness and how to use them to, increase your ability to risk manage, to have the ability to psychologically zoom out on your chart. Like, we know if you're trading futures, like, I've got a minute chart in front of me. I have a footprint and a TPO and all that stuff. But, if I lose track of the 4-hour perspective or the daily perspective or whatever, I could screw myself and get caught up in those little, fractional moves. And it's a similar thing psychologically. If we can't zoom out and use our values and what's important to us in the bigger picture of our lives to help dictate our behavior and affect how we treat risk management, we're in trouble. And another piece of the puzzle in the workshop is really embracing and even leveraging the typical disadvantages retail has versus professional traders. Like, they have a guy yelling at them to manage their risk. They have a team. They have oversight. We don't. We can hide our mistakes. We can reset our accounts. We can do whatever for prop trading. And so sort of embracing the different context, the same way you need to embrace context in the market, as in it's a Powell day, it's a Fed day, it's a data day, it's end of month, T+2, whatever. The same way we need to embrace those realities and take them into account, those contexts. We kind of teach people in the workshop how to embrace the realities of, we are retail traders, we are at home, our lives are mixing. So let's use our lives, let's use what's important to us to help build an internal risk manager to close the gap in that disadvantage that these pros have, these Wall Street guys have over us. So that's a big piece of the puzzle. I hope that makes sense. So overall, the goal is to create a structured, repeatable, actionable trade psych process that helps you stick with your actual trading plan every day and not deviate based on, an emotional hijacking and, when you're on tilt and you're losing perspective. That is what we're really shooting for. I teach people how to, embrace and work with emotions. This whole idea of kind of stomping out emotions or trading like a robot, unless you're a sociopath, it's really not possible. So instead of fighting, because fighting anything will make it stronger, thought suppression or emotional suppression, it's sort of like putting something in a pressure cooker, and in time it's going to explode. So I teach people how to kind of work with these things, embrace them, use them to their advantage, and not have them, affecting their behavior in a way where they're acting unprofessional. They're falling into those pitfalls and building frustration and building bad habits. Getting stuck in that process of over and over resets, or over and over losing money, refunding accounts, or whatever it is that just, crushes your confidence, gets you in a place where you're desperate and just reinforces habits further and further. So it's all about structured, repeatable trading psychology process for emotion management, psychological risk management, and maintaining perspective throughout the day, trading mindfully.
Awesome, Sean. Nice run through there. Appreciate it. And if you're able to drop maybe into the comments of the space, some people were asking for access to psychology resources that you might have. So maybe you can drop some posts into the comments.
Absolutely.
Is that Sean? Dude, let me just say, I love Sean and I love sound training psychology. This is one thing that, Sean and I have been friends for years. We met on Spaces actually, and
We did.
we certainly did. I was in your first space, sir, and I
You were.
remember listening to you talk, and I met you through Mel Stone, and I'll tell you, this is
Love me
something
some
that
Mel.
you guys have to understand. Trading psychology is one thing that there's just nothing out there like that. Somebody to actually understand the market and psychology together, it's to me is invaluable as a trader. Coaching, and I've been learning from Sean and Sean's stuff myself. Even our own teaching at Rocket Secure, we try to employ psychological training as part of not just here's a chart, make a trade. It's there's genuine fear and greed. These are emotions, and I'm not the psychologist, but what is it? The not Kubler-Ross stages of grief. Is that what it is? Right?
Yeah.
That is Kubler-Ross. You're right.
Kubler-Ross. Yeah, you
Yep.
go through.
I'm
You go
a
through that,
counselor.
right? Oh, Kim's a counselor. Oh, cool.
Oh, cool.
Yeah, like you go through those stages of grief when you're losing a trade, just like you lost a family member, right? You deal with all those emotions. And so it's interesting that, traders never really sought out counseling or psychological services just to help you coach yourself through your biggest hurdle, which is your own emotions. That is the biggest hurdle we all have as traders. I will not lie. I know the trading camp. I know Noah's here. The Trading Camp podcast, I told a story about how I kind of went crazy. My first big loss, I was folding towels from the dryer and making a stack of towels, and then I ran out of towels, so I unfolded them and folded them again. Like, you just lose your mind sometimes in your first trade, your first year, and you don't realize what you're going to deal with until you're actually there, right? You can't plan on paper how crazy you're going to go in an upside down trade or how you're going to behave, and it's just like once you get there, you kind of want to be in a place where at least you're not losing all your money when you go crazy. So like risk management, psychology go hand in hand together. So I'm just going to give like Sean a nice pat on the back, because a service like that, I mean, if Tony Soprano can do it, right? You go talk to a counselor while running the mafia. You literally need to talk to somebody to be able to handle yourself with composure while being a trader, because you're by yourself, you're in a room, it's you and your money and your computer, and you have no self accountability. You're going to gamble away your family's money if you don't know what you're doing. So you have to be able to keep that composure. And that is the biggest hurdle every trader has, especially futures. This is a futures space. Futures have the biggest swings if you're not careful, if you're over leveraged. You can lose so much money so fast in futures. It's even more important, I think, in futures. So you guys should check him out. Sean's a great resource for sure. Sound trading psychology. Give him a follow.
Thanks, Matt. I appreciate that. And couldn't agree
Love it,
more.
guys.
It's very.
Yeah, Sean.
Oh, I was just to piggyback on Matt's point. It's very easy. That's what I'm talking about earlier when I'm talking about the context of being a retail trader. It's so easy when you're alone in a room. You're at home to really lose sight of the big picture. And he said, he's talking about how you can mess up your family's life and all these kinds of things, and it's true. And we lose sight of that. And using those values and using awareness of those, so that we feel the effect of those things in the moment, in the price action, helps make difference with choices and behavioral change, and execute things that are in line with your values, that keep you alive and keep longevity in the market and keep you in play. So it's just so important. And again, thanks, Matt, for the props there. I appreciate it. It's been a great relationship. Rocket Scooter, by the way, is a great asset in terms of trading. I do use it. I'm excited he's adding the futures stuff to Rocket Scooter. Very excited about that. I have his hedge pressures and DD lines on my charts every day, and they are extremely helpful, and they're good for trading psychology. Matt has some good stuff built into that system for Trade Psych. So shout out to him.
Love it. Good stuff, guys. Okay, let's go Nick real quick. And by the way, in the next 5 to 10, we're going to kind of transition this into a little bit more just like open trading of all things. But we've got some great speakers on here, so go for it, Nick.
Yeah, I was just gonna say, so we basically almost have that 40-21 rejected there. And again, if you look back on other time frames and just in the past, we have a lot of resistance around that area. And so far, rejecting We also went under 4007, another big area from this morning, and 4005 from yesterday's highs. Um, let's see if we hold this 4000 here. If not, we could be looking a little bit lower, but dollar's starting to rise back up here too, the dollar futures. So let's see, how this kind of relates to what kind of price action we could lead to here going into the rest of the day.
Sounds good. Yeah, Kim?
Yeah, I was just going to mention, I love that you guys are doing the psychology piece. I actually teach at a university and I teach psychology. So I'm a professor and a counselor. And so I love that you guys are bringing this in because finances, money is, a number one stressor for people, for couples. And one thing that hasn't been researched a lot, and they're starting to do a lot more research on it, is personality in trading. So if you look at the peer-reviewed literature, you see a lot about like cognitive behavioral, biases, emotions, but you don't see a lot about personality in trading. And some of the recent information, and I have it pinned on my post, is knowing who you are. So, for example, extroverts. There's been some research recently done on extroverts and introverts and how do they perceive trading. Well, extroverts overall, on average, according to a couple studies, tend to let their losers run and then they get out of their winners too quickly. I'm an extrovert. That's exactly how I operate. And so when you know what your personality is also and how that affects your trading style, and then you look at the emotions, you can kind of put those two things together and go, okay, this is the way I look at the market through my lens of, let's say, being an extrovert, maybe I, have more fear in the market. And so, I don't let my winners run and I get out, but I think those losers are going to come back. And that's just not a good perspective of the market. So it's also knowing who you are as a person. And I'm really into that. So I love to look at peer reviewed literature. What is the latest? And how does that affect trading?
Kim, if I can jump on that, I love to hear this, and it's really interesting to know that about you, and couldn't agree more. In terms of latest and greatest, I'm all about the third wave of behaviorism, as I'm sure you're familiar with. And one of the things that I teach people about are schemas, Jeff Young's version of schemas, if you're familiar. And that point she's making about knowing yourself, little little things that we have in our personalities affect our trading. Like for example, there's people that have trouble setting limits or saying no in their life. They say yes when they want to say no when someone asks them a favor or whatever. Even things like that. If you have trouble setting limits with people, you're going to have trouble setting limits in your trading and setting limits, like literally set stop losses or limits or when to stop and things like that. So you really do have to know yourself to trade your best.
What
Uh,
I'll kind of comment on that, if just as a personal experience, for me trading, I didn't even know you were a professor. Kim, I learn something new about you every day. That's kick ass.
Yeah, I run a psychology actually department. Not department, a degree program. So like, I teach abnormal psych, social psych.
you know, it's just so cool to see, especially in the modern day, especially with spaces like you keep under we, when we started trading, I started in 2010, and there wasn't a lot out there. You couldn't watch people on YouTube. The books were all from the 70s and 80s. It was all, charts. There wasn't a lot of just, breadth of available stuff to help me become a better trader. And like in the modern day, it's just so neat how spaces alone, right? Have congregated folks from all different areas that are giving like modern traders modern tools. Like half of this panel are like risk based, decision makers in Roxier's risk management platform. You guys are trading counselor, and we have a psychologist. These are the real tools that are the real problems every trader faces. It's hard to read about psychology in a book as a trader and apply things, because each person, and I'm probably going to sound like an idiot compared to y'all because I'm not a psychologist, just from my personal experience. Each person's completely different. And it's like you don't know what your composure is until things get bad. And you may be the world's most fearless, strongest person when things are good, and you may become the world's most weak-minded, most influential person when things are bad. It's like you don't know. What I've learned is you don't know what you're made of until you hit your first bad experience. And I think I can like relate with a little tiny story just quickly is that, when I used to work in the plants as an engineer, you don't know that you're scared of heights until you climb up 300 feet of ladders and look down the first time. And then all of a sudden you get a cold sweat. You would have never known until you actually do it. And then you freak out and someone has to rescue you. Like, that's what trading is like. You don't know. And you may think, that's not me, but it's everybody. And the thing that really spirals people out of control, and I've learned from personal experience, is that day that you just fight and fight and fight, and you've whittled down your strategy, your composure to basically nothing, and then you're just desperate to get out of the hole, and then you blow up your account, and it's that next day that you wake up and just wish you didn't wake up the day before. You're like, man, I wish I wouldn't have just touched that thing. And that's the day that you realize it's too late and you don't have any more money to trade with. And it's like that's the one thing that every trading coach should want to intercept, is that experience of every trader. Is like, you need to be introduced, I believe, to risk in a certain amount of way, a certain like little bit of risk without taking all the risk. And like Elite Trader Funding, a program like this, and I taught this lesson the other day, and if you really think about it, people always say that paper trading is not a real experience, and it's not. It's just playing a video game. But when you're paying for an eval account, $200, $300 a month, and the prize is a funded account, you are risking real money to pay that monthly fee to get a real reward. It's paper trading with an asterisk of actual real risk and reward. You will take that experience very seriously because you're paying your real money to have it, but you're not losing your money if you lose. You're losing $200 or $300 a month and whatever the reset fees are. So it's like the perfect way to battle that psychological hurdle of trying to maintain an account alive that you paid a couple $100 a month for. So it's like not really just like absolutely easygoing paper trading that you're not taking seriously. You're going to take your monthly fee seriously. So it's actually like real trading without really trading. And there's no perfect experience that I ever thought until I actually thought of this last week and go, wow, because this is the first time I've ever done an eval account. This is paper trading, but it's real trading at the same time. Blew my mind, right? And so this is the perfect way to get that exposure to that. Am I going to freak out when I blow up my account? Well, at least you didn't blow up your family's inheritance, right? You blew up a $200 subscription. It costs you $75 or whatever to reset. That is a real experience while paper trading. And it's the perfect blend of psychology and getting started. And I can't say that I'm glad you guys are here, because it kind of ties it all together. And I taught a whole class on that this last week, that it's actually real trading if you really piece it out like that.
Love it, Matt. Okay, so we got a lot going on here, but we got more hands up, so I'm excited to keep it rolling. Like I said, we are going to be rolling more into just our open trading style stuff, but it seems like we got some great commentary on this. One more time, if you have not already followed my co-host Elite Trader Funding, they're the one that we've been referring to. I'm following them. You should be as well. And again, we do have that link in the top of the space if you want to check out getting a simulator account so that you can play around with this and have the opportunity to learn more about futures, like Matt's just said, without risking your family inheritance. So there's some really good stuff there. That link in the top of the space should get you that free trial simulator. So go ahead and check it out, and let's go over to Noah.
So I wanted to touch a little bit more on the paper trading. If Expo or Kim has a trade, you can definitely let them go, because I don't want to take up too much time.
I don't know if they have a trade. Maybe Jesse, do you have one?
No, I was just going to talk about and add on to what Matt said. So go ahead, Noah.
Awesome. So the paper trading thing it's funny because we actually had a discussion about this the other day in our Discord, and it's like, I know that everybody has sort of their own opinion. Some people like hate it. They think it's useless. Some people really like it. For me, just like my personal experience with it, I think of it as like a hunter, right? Like if you're a hunter, a lot of your work gets put into whatever you're hunting. How does this animal move? What is this animal's seasons? When is this animal going to be? Where I think it's going to be? Where should I go to take the right shot? Like all of that, like preparation. Actually taking the shot might make up less than 1% of the hunter's job. But if the hunter can't actually make the shot, he's not going to be a good hunter, right? He's going to suck at his job. And so for me, that's how I look at paper trading, where it's like, I know it's not real money and it's not real risk, and you're never going to get that. Like Matt said, that personal, that emotional experience of, okay, I'm actually in the trade, risking real money. What do I do now? But I do think that it can be beneficial just to get in the habit and the process of, okay, here's my setup forming. Where am I going to enter? Where am I going to put in my stop? And actually doing all of those things, because if the first time, how else do you practice that without real money, right? Like if you don't practice that part of the game, when it comes time, how do you know you're not going to fat finger your order? You meant to buy 10, now you're on 100 contracts. How do you know that you're not, how do you know where to find the stop loss button? Things like that, right? Like I think that those are things that experienced traders take for granted, where like if you're a newer trader, you don't have experience doing those things all the time. And so I in that aspect, particularly as I was learning how to trade, I think paper trading helped me out a lot, just in the process of, here's how you get into the trade. Here's, okay, my setup's forming. Here's where I should enter. Should I enter with a limit or a market? Where should I put my stop? Should I use a stop market or a stop limit? Like those types of decisions, if you're trying to make those decisions for the first time on the fly when you have $1,000 of risk on the table, like it's going to be significantly harder. And so for me, that's why I always advocate for paper trading, particularly for newer traders, because I think outside of the other benefits, I think that's really the primary benefit that you get from it, is just getting in the habit of doing it. It's much easier said than done, when the time comes and you're actually risking real money to learn how to do all of those things. So that's just my 2 cents.
Appreciate it, Noah. All right, Jesse, you want to go, and then we'll go to Kim?
Yeah, kind of the same thesis as Noah there. I'm very anti-drama, and so I don't spend a lot of time on Twitter, because it seems to be a lot of, at least just prowling around Twitter, because it seems to be a lot of drama and all that stuff. But yeah, so paper trading is awesome. The only time I hate paper trading is when people send screenshots of them making $1 million in a day when really they made $0, and then they try to sell a course or a mentorship when really they don't even know how to trade. That's the only time I hate paper trading. Paper trading is the best way for anybody to learn. And paper trading has also come a long way since when I started learning. There wasn't really good paper trading. Everything was, 15 minutes delayed or what have you. Now it's, maybe even real time. And so you're losing money paper. And then if you make money, you don't really feel that emotional attachment as much either. But then when you look at these prop firms, you're kind of paper trading on prop firms, but not really, right? You're having the emotional detachment from it, where like if you lose money, you're losing the prop firm's money. But if you make money, you're making your own money. It's your real money, so you're able to fine tune your strategy, your profit taking, stuff like that. I've always told people that every time I try something new, there's always roadblocks. So when I first got funded with a prop firm, my first roadblock was taking profits too quickly, and then you learn that. But like I said, the beauty of it is that you're not dealing with profits, or you're not dealing with losses on your own side. I'm not 100% sure what Elite's pricing is, but say it's $100 a month. That's a lot cheaper than you throwing $500 into an account to kind of learn how to trade. Do that eval. You can do that eval 5 times over before you're blowing an account, versus you might blow your account with one trade. So kind of tying in paper trading with prop firms, it's kind of a whole new world where you're able to have that emotional detachment from trading, but also keep making real money. So kind of the best of both worlds, in my opinion.
Gotcha, Jesse. Yeah, Kim?
If I could leave everyone with one nugget today from psychology and trading and psychology in your life, it would be to delay your gratification. And what that looks like is there is a lot of research that shows that people that delay gratification are more successful in life. It's correlated. Correlated isn't causation, but it's one of the factors that helps people to be more successful. So what I mean by that is if you can look at making $100 a day versus $1,000 a day, right? And if you can look at it in small chunks versus I've got to earn $1,000 a day and get greedy, and you look at I'm going to start with $100 a day or $50 a day, and you add that up over every single trading day in the year, that's $24,000 a year. Who doesn't want to make $24,000 extra a year? I mean, if you have a job and this isn't your full-time job, right? So when you delay that gratification and you look at it smaller and you set your goals smaller, when people set goals too big, they often have trouble reaching them, right? So if you delay that gratification and you chunk things and you go, I'm going to go smaller versus bigger, and you set your mindset that this is my goal, if that for you is $25, $50, $100, and you start multiplying that by every trading day, right? And you keep it like that, then you can in time scale up because you've learned the basic mechanics of how to get there. You've delayed your gratification for, I've got to make $200,000 a year. Like somebody said, you're posting that $1 million trade. Those people that are doing that, they're losing it on the other side. I guarantee you, unless they're professionals, right? And even the professionals, even my husband, he's seen people blow up because they couldn't just accept that, hey, I made my trade for the day. I'm done. Add that up over a year. I'm helping my family. I'm helping myself. So delay your gratification and make your goals small. And when you make those goals small, you can stair step those goals together, scaffold them, and eventually you'll end up reaching a goal of making bigger money if that is your goal, because you'll have learned the mechanics along the way. You'll have learned to take it small. And by the way, when you get that reward of the small trade, right, that empowers you and you start to build confidence. You have what's called self-efficacy, belief in yourself. And when you have that self-efficacy, that gives you the confidence, not a fake confidence, a real confidence, because you've learned it along the way how to build over time. So that's my trading psychology tip. We should all do a trading psychology spaces together.
I think we kind of have been.
I feel like the futures space is like the best place for it. Like we've been sitting here talking about trading futures and psychology. It's just like so cool. I told everybody, like, this is my favorite space. I like this one better than the Rocksteer space. I'm not gonna lie. This is such a cool assembly of folks because these are all the components that day traders and futures traders need. Psychology is your biggest battle. And I'll throw a little tidbit before I sign out of here, is that, futures has the allowance to let you trade all around the clock, right? Futures has the allowance to let you lever up. Like discount futures brokers give you $500 a contract. You literally need $500 in your account to trade something that normally costs $11,600. So imagine levering up 23.2 to 1. That's ridiculous risk. That's much more risk than you get in a FINRA account. So the problems come from not having that self-control. Futures gives you the ability to literally blow up your account and lose more money than you started with and owe your broker money. If you didn't think that's possible, imagine having a credit card you don't pay off and they charge you off and debt collectors come after you. You can go negative hundreds of $1,000s if you're not careful in a futures account. It's very possible. I've taught a class on how it's possible. But barring that, you require self-control to last in futures. And if you have that self-control, futures is the easiest place to trade, and there's no better place to trade. Options have Greeks that make the trading harder. Stocks have massive amounts of capital you have to lock up to go in and trade the stocks. Futures, if you know what you're doing and you apply that self-discipline, which is psychology related, you will have the easiest time as a day trader, in my opinion. And every single time people say, I want to get started trading, where do I go? Most people jump into penny stocks because it's popular and cheap. Most people jump into zero-day options because it's popular and cheap, and they can get over the hurdles that the SEC or that FINRA has put on margin accounts for equities markets, right? But futures is a completely different market that's regulated completely differently, and it's designed for entry-level traders. But you have to have that self-discipline. So all the talk about psychology, we're very honest with you. I'm being very honest with you, is the most important thing. If you have that discipline, you will love the futures world more than anything else. And you'll probably never go back to options and stocks, because futures just go up when market goes up and goes down when markets go down. The control comes with the allowance you're given to lever up. So you don't take that allowance. You have to train yourself not to go in too heavy and train yourself to really be disciplined. And it's that environment where you don't feel like, everything has perfect control if you give yourself that control. So the biggest hurdle in futures is psychology. But to me, it is the best place to get started, because like Kim said earlier, you can trade micros, you can even trade nanos, which are dollars, put dollars on the table to still go in. Then you have ETF, of course, that gives you that experience to trade. It's practice trading, but you still pay for it. So you will take it more seriously because you're risking real money of your own. So just keeping in mind, that is what my take is. And I think it's great that everybody here is focusing on the things that actually matter. It's not just a space where we're all like, we long, we short. It's really talking about the things you deal with. And speaking of that, I did close my position earlier on my long, and I am $700 away from passing my eval account. So y'all have a great morning.
Yeah, really nicely done there. We just absolutely shot up here this morning on a couple of these. So pretty solid to the upside. I'm actually looking back real quick to see. Okay, yeah. I think those that exited pretty nice. I can see I was in and out on the same candle. All right, what's up, Sean?
Hey, so I just want to add on to a couple points. I forget who was speaking before Kim, but talking about the benefits of prop trading and that balance between paper and risk is a really great one. And also, the rules involved with prop trading require discipline and really can help you build good habits. And I think that's another advantage to prop trading, on top of, like Matt said, not ruining your family fortune. And that's something that really should be considered by people looking to get into prop trading. And as for what Kim was saying, Kim, I would love to do a Trade Psych Spaces anytime. But your points about self-efficacy and building mastery and delaying gratification are so important. And something that people can do if you want to practice delaying gratification. A couple things to do are very simple. Next time you go to a store, pick the longest line. Do that for a month. Every time you go grocery shopping, every time you go to Best Buy, whatever, pick the longest line and wait and look and see that there's shorter lines, and that you do have the ability to make the choice to go to that shorter line, but you don't have to, and tolerate that. Or next time you want something gratifying, whatever, you want to have a drink, you want to have dessert, you want to go and do something, when you notice that urge to go and do it, set a timer for 10 minutes and don't do it for that amount of time, and wait and pay attention what it feels like to wait. And those types of experiences build that self-efficacy, that sense of mastery that Kim was talking about. It's just a way to practice it, because it all translates into trading. So just want to throw that out there for some ways to get started.
I love that, man. And I'll throw one more tidbit. I don't know if you heard this in our courses. I tell people that, and this is something that I've, anyone deals with like addiction or problems, right? And so anything that you have to unbreak a bad habit is hard to do cold turkey, right? And I always tell people, like, when you try to quit smoke, everyone's different, of course. So this isn't a universal thing, and not medical advice, of course. But if you try to quit smoking, you can either A, try to quit your bad habit, which is the hardest thing to do, or B, adopt a good habit. Adopting good habits allow you to more addictively addict yourself to something that's better for you. If you want to quit smoking, start working out. You'll hate the idea that you throw up every time you work out. And if you like working out better, then you'll be addicted to something better. So instead of like trying to curb your addictive personality, I always tell people, use it to your advantage. Become addicted to something better. If you're addicted to gambling, it's hard to unaddict yourself to that. So then become addicted to risk management. Become addicted to finding a way to be in control. Find new habits. So I tell all the traders that come through Rock Zero program, and it's funny because people always say, why am I doing this? And then 2 weeks later, they go, oh. I tell everybody to wake up every morning, 10 minutes early, and just make your bed every day. Do something different. You got to get used to adopting smaller good habits that are helpful to you. And then it doesn't become, it's only a nuisance the first couple times and just becomes routine. You know, like you said, getting in a longer line and doing something different. The way to break bad habits, I always believe, and you guys maybe all can confirm this because I'm not a psychologist. This is just my own personal, belief, is that you just have to do smaller, different things that, a 1 minute or 2 minute task that is a good thing for you or the good thing for the community. And then you start getting used to change. And that's the hardest thing to break a bad habit, is just your refusal to change. Right. So I love that shot, that grocery store analogy. That's great.
What's up, ETF?
Yeah, so I just want to like one thing. So if you guys have found this useful, is with Sean and just kind of the things that insights he's offered and want to learn more, like we're partnering with him, so we're covering half the cost, and then the other half would be on the client to do it. So you guys are interested, please just go to our website and contact customer support, and we help you guys get signed up, because we do have 15 or so slots left. So just we will work with it, and it's a great experience. Trust me, Sean is fantastic, and I really think you guys would get a lot out of it. So thank you guys.
Absolutely. Good to hear that. And yeah, that link again was in the top of the space for those that want to check it out. Okay, continuing with some market thoughts, and we're going to have more speakers joining up too.